What's up guys, it's Michael here. Here's a quick tutorial on how to fill out 1120. So before I get into it, please click the subscribe button down below. And also you guys can check down below for timestamps if you are looking for something specific. If I didn't cover something in a video because 1120 and 1120s is extremely long in a next video, please leave a comment down below and I'll try to get back to you as soon as possible. Now let's get into it.
This is a quick presentation on how to prepare Form 1120. So 1120 is the U.S. corporation income tax return. Who files Form 1120? A C corporation. So U.S. domestic C corporation is required to file an annual income tax return with the IRS every year. So the tax return is due on the 15 days of the fourth month after the year end, with an exception for accounting year ended June. So if your accounting year end is June 30th, so the tax return will be due on the 15 days of the third month after the year end. Any taxable income reported on this form will be taxed at 21% for federal income tax purpose. So if you don't have enough time to file your income tax return, Form 1120 for a C corporation, you can file an extension by submitting Form 7004 and to request an extension for 6 months. So don't forget that filing the form can be extended for 6 months, but the tax payment cannot be extended. So if you owe any tax on the tax return, you have to submit the payment on or before the 15 days of the fourth month after the year end. So how to prepare Form 1120? Before you even start the preparation, you need to do the bookkeeping. And to summarize your incomes and expenses and come up with a balance sheet and profit and loss statement for the company. After you have the profit and loss statement, you also need to know if there is any book to tax difference. For example, penalties. Penalties paid to government, paid like a parking ticket, is not deductible for tax purpose. And not all the meals entertainment can be deductible. And with the exception in the last 2 years, some of the meal is 100% deductible. But entertainment is not deductible. If you go out to entertain your clients or your customers, and those may not be deductible. So those are the book to tax differences. And after you have all those data, then you're ready to file a Form 1120. And after you prepare the Form 1120, then you know how much tax due or refund you have. So Form 1120, the main form have total 6 pages. And every items can have a schedule or have an additional form. It depends on how complicated your business is and how much activities you have for the year. That form can be up to a couple hundred pages after you include all the schedule and all other forms. So, but today we just go through the first 6 pages and at a very high level. And if you have any questions, we can go through it and with another section. So on page 1. Page 1, basically, you put down the name, federal ID number, and tell the government how much income you have, how much expenses you have, and what is the tax liability, what is the tax payment. It's a summary of your income and expenses and taxable income, and eventually come up with how much refund or balance due you have. So this section right here, you put in the name, mailing address, and then right here, tell the government if you need to file consolidated return, if you have subsidiaries, you have parents. You check one of this box. And if you need to file Schedule M3, if your total asset is over $10 million. And on line B, you put in federal ID number. And line C, put in when the company is incorporated. And 9D is the total asset. And right here, there's a little section right here, line E, just tell the government is this the first return or this is the final return? Did you change your name or your address change during the year? So on this form is 2022. So during 2022. So the first section right here, you fill in the income, how much income you have, and including gross receipt if you are in a trading business and you have any return allowance. And then on line 2, there's another schedule showing the government how much inventory you have and how much purchase, how much cost of goods sold you have. And then line 3 is the gross margin. So line 4 to actually line 10 are all different income, like dividend income, interest income, gross rent and royalty, capital gain income or loss. Then you put in another schedule. So it could be a couple other pages or not more pages. And other gains and other income. So you come up with a total income. Right here in the first section is income. And the second section right here is there are all the deduction. The wages you pay to officer, the wages you pay to employee, the rent, bad debt expenses, depreciation, charitable contribution, and anything you don't see right here from line 12 to line 25, you can include in a schedule for other deduction. So by the time you reach line 30, it's the taxable income. So line 29 right here, we can open another section to talk about it. Those are the net operating loss. If you have income, generate income this year, the loss from last year, from prior year, carry over can be used to offset your income. It depends on the rule for the year. So after you come up with the taxable income, the third section right here, you're going to have calculate how much balance due you have, or maybe you have refund, or you carry over the refund to next year. So the bottom line right here, you need to have an officer of the company to sign and date the form. So this is page 1. Page 2 is Schedule C. Page 3, the whole page is talking about dividends. So most of the small company, they don't have dividend unless you invest the company into other company who distribute dividends or invest in stocks that can have some dividend income. So some of those dividends, if you receive dividend, may qualify for dividend deduction. So certain dividends can have a deduction of 100%, meaning you receive a dividend from affiliate group members, and those could be depends on your ownership, and you have a potentially you can exclude those income from your taxable income. So this is page, the whole page is dedicated for dividend and dividend deduction. Page 3 is the tax computation. On the first section, you calculate the tax, how much tax, income tax you owe on line 2. And then you also have other tax is supposed to increase your income tax. It depends on the facts and circumstances of each company. And you also have foreign tax credit. All those credit are non-refundable credit is going to be recorded in here. This non-refundable credit is going to reduce your total taxable income. So only if you have income tax, you are able to use this tax credit to lower the total tax liability. So if you don't have tax that year, those credit cannot be refunded. You can carry it over to future years. So at the bottom right here, line 11, after you calculate the total tax, all the tax credit you have, and then you will have a total tax right here. And then section 3 is the payment. So if you make any estimated tax payment, you have overpayment carry over from last year, you report on 13, and 14 you report an estimated tax payment, and then all other refundable tax credit right here, or you make a payment with the extension, you all put it right here. So you go through a line by line, fill in the tax payment and the tax credit you have, then total will come up with the total payment and credit. Both total tax and total payment and credit will go to page 1 and report at page 1. So right here, so total income, taxable income, the total tax right here 31, And the total tax payment right here, basically you just have to read that, the Schedule J. From Schedule J, that number will flow in here, page 1, to calculate how much tax you have, overpay or underpay. Now go back to page right here, page 3. So next one is page 4 and 5. Page 4 and 5 is other information. Those information are very important. Like every single one of those questions, they only ask yes and no. And some of them you may need to put in a schedule to explain why is yes, why is no. So these questions are important because they basically telling the government that who owns this company and what you have ownership in, and if there's any merger acquisition, any transaction incur during the year, and what is the accounting method you're using. You use cash method or accrual method, and what the business activities are. Are you a trading company or your service company, and what do you do? What is your product and what is your service? And all answer right here, line 2. And line 12, you will tell the government how much loss you have in the previous year, or the loss you have not used, which carry over into this year. So you can use this loss this year if you have income, or you can continue to carry it forward if they have not expired. So we can have a whole section talk about net operating loss. And page 5 is a continue of the other and important information. And right here, a lot of people ask about 1099. So you look at question 15 right here. They basically ask, did the company make payment to anybody that required to file 1099? So you want to answer this one properly. And they also ask you, okay, if you are required to file this 1099, did you do it? So if you say no, then will be an issue. So also, yeah, you just need to go through all this question, yes, no question. And page 6 is the last page of the tax return. Basically, you report your balance sheet. The balance sheet, after you do the bookkeeping, you know how much asset you have, how much liability you have, and how much net equity you have. So you report it right here. You report last year, and you also report for current year. This is the section that you report your balance sheet. And then the next schedule on page 6 is Schedule M1. Schedule M1 is a reconciliation of income per booked with income per tax return. So we talk about you need to do the bookkeeping. You need to know the book to tax difference or differences before you file the tax return. So we are talking about this section. This section basically telling the IRS that how much income or loss you have for your accounting purpose or bookkeeping purpose, and how much you have a taxable income or loss for income tax purpose. Right here, the left section, you're going to anything not deductible. You have to add back right here, increase the taxable income right here. On the right hand side, anything is deductible for tax, but not deductible for your accounting. Your profit and loss you report on the right hand side. For example, if you receive tax exempt interest, which is income for bookkeeping purpose, you did receive the income. However, for income tax purpose, is not taxable. So right here, you're going to take out that amount. Or you have depreciation. You purchase a machine. For accounting purpose, you need to depreciate that for like 5 years. But for income tax purpose, you can depreciate in the first year when you place that in service. So that will create a difference. The difference is going to put in here. You're going to decrease the taxable income. So on the left-hand side right here, certain entertainment, certain penalty, federal income tax, those are not deductible for income tax purpose. You have to put that number over here to increase it. So ultimately, after you go through these exercises, on line 6, this number is going to be your taxable income, which will tie to on page 1 line 30 right here. This number will tie to your schedule M1. So the last section on page 6 is the retained earning analysis. So retained earnings showing your accumulated earning and your accumulated contribution, and any distribution will reduce your same thing right here. So on the left hand side, any income will increase your retained earnings, and any loss will reduce your retained earnings. It's right here on line 2. So this number basically on line 2 will equal to the number right here, line 1. And after you reconcile or roll forward the retained earning, this number on line 8 will ultimately equal the number on the line 25 for retained earning. So all the schedule, they tied to each other. They should be able to reconcile. So this is a really quick overview how to prepare a 1120, and every section can have another discussion, a long discussion about every single section. So I just have a quick summary right here. For income and deduction, you report that on page 1, and on page 6 you reconcile that for the income or deduction which excluded from the taxable income or included in the taxable income. So you report that reconciliation on page 6, schedule M1. Asset and liability, you report it on schedule L and page 6. Other information basically on page 4 and 5, and all the tax and credit are reported on page 3. So it sounds pretty fast, but it's actually Form 1120 is really complicated unless your company activities is really straightforward. So even though straightforward, you still have to should go through all the question or the checkbox carefully, so then you can file the Form 1120 correctly. So, and better yet, you should consult your tax advisor or your tax preparer on your 1120 preparation. And thank you for listening. If you have any question, you can leave a message, and we can discuss. All right, thank you.